Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, good morning on, let's call it a misty Friday, looking outside. And maybe it's a bit misty in the financial markets.
Well, they seem to have bounced back from yesterday's meltdown. So,
yesterday's meltdown, man, that was a hit. The U.S. bank stock index (BKX) was down 11%, and the index for energy stocks was down 12%. I mean, that's in one day, which was quite forceful. There were explanations about it. One was that coronavirus was coming back again, and then I saw Richter with an explanation as there were some weird numbers coming out on unemployment figures, and you know me, I never really like to discuss them because they're weird even in ordinary calm times. So, but it created a what we call a technical thing called an island reversal, where straight up and then gap down. And there have been a number of those. You can't say that it ends the bull market, but you can say that it's a warning that the recent buying was just becoming too impetuous. And also, from a few weeks ago, there was stories going around where, with so many people isolated at home, many newcomers suddenly took to day trading, and then about three of the big brokerage firms went to zero commissions, hoping to get the assets on board as accounts. And so I think there's a whole lot of new people suddenly came into the business in a very impulsive manner, and that obviously could be creating a top. Now, we're going to back up a little on this, Jim. You remember in early March, well, it was the middle of the March, when we thought that this looked like it was bottoming. We had thought that the selling pressures may end in mid-March, or the end of March, and I think it was March 23rd was the low. And then when the rally started, probably into about mid-year, and then a number of weeks ago, we did the sell in May and go away, and noted that when you're in this kind of a market, May could have 5 or 6 or 7 or 8 weeks. So it looks like it was done on the 6th week of May. But anyways, that's our little intro, and I think we had some questions.
Yes, our first question is from William Gruters from my favorite low country, the Netherlands. And he wants to know about the gold-silver ratio. He doesn't understand why it's in the particular position it's in right now. Do you have an explanation for the wide gap between the price of gold and the price of silver?
Yeah, I think I was the first one to discover that the gold-silver ratio, or the other way around, the silver-gold ratio, was a metallic credit spread. because when you're in a boom and you got a rally going on in both metals, silver will always outperform gold. And oftentimes when gold and silver are rallying, it's in, with an expansion, and you've got same things going on in base metals and crude oil and stuff like that. So that's our inflation story. And then decades ago, I noticed that really it was a very sophisticated indicator on financial conditions. So let's talk about it as the gold-silver ratio, which is the traditional way. And when that number is going down, it may be in a boom, or let's put it this way, it often goes down in a boom. And then when it gets hysterical or volatile, that's suggesting change can be coming. And then when silver starts to go down relative to gold, and the gold-silver ratio goes up, it can signal by some weeks the arrival of problems in the financial markets. And it's quite reliable. It's not absolutely bulletproof. So that's what happened in December when the gold-silver ratio was at 87, and I remember seeing a silver bug saying, "Oh, this is too high. It's got to go the other way, and silver's now going to outperform." And we noted that gold-silver ratio was breaking out, which was suggesting potential financial problems. And our target was what did I use? 115. Just picked it out of the air, which is preposterous. It's never been that high. And then it soared up to 130. So, good question. And the gold-silver ratio recently, in the last, this week, is ticking up a little. We'll be watching it for a breakout. If it does break out and go up, it means that the WAC yesterday may be anticipating a broader decline for maybe into August.
Another question comes from our friend Scott, and he says there are two camps. One that believes central banks are clueless, bashing around in the dark, and those who believe central banks know exactly what they're doing in an effort to take over the world. Bob, are they a bunch of clueless buffoons, or are they out, as Pinky and the Brain would say, to take over the world?
No, I think they're pretty foolish. You just have to look at Bernanke was a PhD scholar, and his field was the 1929 boom and crash, and he never really understood it. I read a few of his articles on it, and he really believed that they could prevent recessions. So I think that while they're there, first of all, there might be 600 economists working for the Fed, and they're all going to believe the story. The head guys, they're the public man. They have to say what the system expects. But the original idea of the Fed was to prevent financial setbacks. And why did they want to prevent setbacks? Because setbacks preceded recessions. So the boast behind putting the Fed together in 1913 was that it would prevent recessions. And as we beat it up all the time, there's been 18 recessions since the Fed opened its doors for business. So the theory does not work. And it exists to make one-way speculation where the big traders can strap on huge risks, and if it works, they win, and if it goes against them, they get bailed out. Now, you and I Jim, have been talking since the hit came into the market in February that the change just in credit spreads and the yield curve are such that a number of trading desks would have been offside, and there would be some insolvencies reported. There haven't been any important insolvencies reported because they've been bailed out. So, but nonetheless, that's just staving off. So, to wrap up the discussion of the Fed, is that their theories are stupid, they're unproven, and the Fed has been corrupted from the old notion of preventing recessions to actually funding an experiment, an authoritarian experiment in government. So the Fed has been corrupted into, providing endless credit for an experiment in authoritarian government, but probably all of this together is trashing the economy. You do have a business cycle and a credit cycle, and there will be contractions in the future whereby I think it'll trash the Fed and its theories. I hope I'm around for it.
Well, with the business cycle, and we have the Fed pumping literally trillions of dollars into the markets, is that a waste of money? Are they just going to settle out and bottom at some point beyond now?
Yeah, it's been ignored, but in the 1929 crash, right through the fall, the New York Fed opened its windows and bought bonds out of the market. The New York chapter of the Fed exceeded its lending authority by a factor of 6 times, so it was hugely easy. Interest rates fell to 0, and in early 1930, a Fed spokesman said that they met the crisis in the classical way by providing liquidity. They thought they'd fixed it. And then you have, and I've mentioned this before, July 1932 was the washout bottom there, but Barron's had an editorial, and Barron's is a very good financial publication, and they pointed out, and the lines were essentially that every anti-deflationary measure taken by the Fed is seen not to be working. And the anti-deflationary measures was buying bonds out of the market. So my conclusions on that were that the Fed was easy, provided liquidity, interest rates fell to 0, and the recession continued. Actually, they then called it depression. So I think this is going to happen this time. Big fanfare. Well, they were easing hugely in 2007, cutting interest rates, and you had then the worst calamity, as they wrote it up, since the 1930s. So here we are, another bubble, and I'm impressed with just how reckless the Fed has been. But at the end of it all, the Fed, the taxpayer, the real world of making things and distributing things and consuming things is going to pay the bill for yet another reckless experiment in central bankers. And if they're not doing it to take over the world, they're doing it because they're still practicing a bogus theory, and they also are keen to fund the government. So, hey, that was a good question.
We'll have more with Bob Hoye right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Bob Hoye. Bob, a headline that caught your attention. Tesla is now near the top valued car maker in the world. Their shares the other day hit $1,000 for the first time. Do they really deserve to be up there with Toyota or Volkswagen?
Nope. I'm not a stock analyst anymore, but I have an acquaintance who has been a consultant. He's an automotive engineer, and he's a consultant to the big production lines. And he just says that the way Tesla does things is first rate. They hire the best of consultants and the best of equipment. And for example, the plant in California he says, is just so expensive. They'll never get a positive return out of it. So, and somewhere now Mercedes is coming along and building electric cars. So other manufacturers are building them. And then at some point, if we go into a recession, government's not going to have any money to subsidize upscale people in their mania to buy electric cars. So I think there could be great disappointment ahead, but listen, I've always told my people and myself, don't short the stock, because those guys are incredible stock promoters. So it's sure, old-time traders would love to hit the short on that one, absolutely right, but they got very big pockets and lots of balls. So at some time it will be a short, but not for me.
Well, if you want a free Tesla, all you have to do is go up in orbit and grab the one that Elon launched up there.
That one, yeah.
With his rocket.
I'd forgotten about that.
Yeah.
That's a good story, Jim, yeah.
We'll have more with Bob Hoye right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Bob Hoye. Bob, another headline that caught your attention. It blares out, Deep State to Fed. Stop growing stocks higher or you'll re-elect Trump. What's behind that?
Yeah, well, the Democrats and the left everywhere find Trump absolutely intolerable. And, of course, why? Because underneath all the bluster and whatnot, he is trying to get the U.S. back to the concept of limited government, limited by the Constitution. And when you've had an ambitious expansion of government for 100 years, it doesn't stop easily. So the Democrats and the left, and I might say liberals in Canada as well, they want to see hard times because then they can be the saviors of everybody. They want to have everybody on welfare and voting in the states for Democrats dependent on government. And in Canada, same thing. Everybody on welfare dependent on government and captured voters for the Liberal Party of Canada. So it's disgusting. But I think that the political world, political history is getting ready for another popular uprising where ordinary folk just get so fed up with how well government apparatus people are living. And the last successful popular uprising was in the late 1980s in Eastern Europe, when ordinary folks without weapons took on a murderous police state with machine guns and stared them down and tore down the Berlin Wall, which is a wonderful symbol, when that preceded the collapse of many communist governments. So what's happening recently is that while you can't call them communist governments, and they don't call themselves communists, it's the same thing. It's authoritarianism. It was just a different banner. The hammer and sickle is gone, and now it's a new Green Deal. It's global warming is such a threat, and if you send money to the United Nations, they can make the warming go away. And then there was the coronavirus, the Wuhan flu, and no government in history has ever shut down an economy that fast and created such a rapid rise in unemployment. The only thing I've found that was a very serious collapse was in England in 1665, when the Black Death, the bubonic plague, hit them, and it killed something like 25% of the population. That's not 25% of those who got the disease. It was 25% of everybody. So the economy absolutely shut down. But there was no great effort by government then to freeze everything up. It was more or less voluntary. So this, using the Wuhan flu, has been a gambit intended to collapse the economy, to then be the hero and rescue everybody, but it is an attempt to bring on one world, one government, authoritarian, in-your-face and in-your-wallet government that would be just as nasty as any government in history that went by the name of communist. So there is my editorial for today.
Our last headline that caught your eye, the Great Diamond Glut. Apparently there's warehouses overflowing with these sparklers.
Yeah, gems worth billions. Well, the diamond market is a very controlled marketing scheme, and in the last 25 years, geologists have become very skilled at finding new diamond deposits, and there are very large capital requirements to put one of these into production. So when you get them started, you want to keep mining for profitability's sake, so then it's important to keep the price rigged. But in the last 25 years, you've had the phenomenon of China going from a communist country to at least a booming country capable of producing things. But it reminded me of in the early 1930s when everything collapsed so fast, and somewhere I know I've got a headline about that the De Beers Group had lost control of the diamond market, and with collapsing sales, the price did drop, and it took them, I don't know, but a number of years to regain control of the market. And here we are. There we had the headline, and I think it's an important one, so we'll be watching it as time goes by. We note that since 2014, the oil cartel fell apart such that in 2014, crude was at 105, And then earlier in the year with the collapse and on a strange end of a contract, it went to minus 39 or something like that. So the oil cartel is over. The diamond cartel seems to be in difficulty. And the one group that we can look forward to seeing problems in would, of course, be the central bank money cartels. And market forces eventually get every distortion. So, Jim, we're going to have a fun few years.
And maybe you can get some cheap diamonds for your tiara.
Oh, yeah. Not for me.
Bob, thank you so much for being on the show.
Jim, good to be with you, and look forward to next week.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.